Hello, good morning. It's Friday the 25th. I'm FX Plu, and this is the market brief. So the Russian invasion has changed everything. When Russia crossed into Ukraine, Putin declared that anyone who considers interfering would face consequences greater than they've ever faced in their history. Punchy stuff. But the longer the conflict goes on, the worse the effect is likely to be for the global economy. And the Bank of England will no doubt be cursing Putin as their job just got a lot harder. UK inflation is already about 5.5% and still rising. But here is yet another major situation for them to deal with. Oil went over $100 a barrel for the first time in 7 years. And the wholesale gas price, which had already quadrupled last year, that rose by a further 60%. Higher energy costs will naturally push up inflation even more. And if the oil price remains above $100, it will hit global growth. And even though the UK doesn't get any oil or gas directly from Russia, the inflationary effect from the rising prices will be inescapable. Then add to all that a slowing global economy, and you've got some serious problems. So the Bank of England will need to tread carefully. With a slowdown likely in the UK, the economy risks stagflation. You remember that's where inflation drives prices higher while activity and output are falling. And the wrong policy decision could choke off growth and send the UK into recession. No pressure then. In the market, sterling dropped to 132.75 against the dollar in volatile trading yesterday as risk appetite was firmly knocked by the Ukraine invasion. We opened slightly higher, around 134.25 against the dollar this morning and about 119.65 against the euro. As expected, Biden woke up from one of his snoozes and condemned Putin's actions. But while the US has deployed more troops into neighbouring NATO member countries, the US will not become directly involved. Of course, sanctions will affect the Russian economy, but Putin was well aware of what sanctions to expect, and he decided to invade anyway. So is that it then? Putin fancied a bit of a land grab, rolled into Ukraine and changed the world order? It's frightening stuff, isn't it? Back stateside, the Fed meeting is getting closer and Powell is determined to remain independent and unconcerned by the midterm elections later this year. There are concerns that if the Fed front loads the interest rate increases with 1 or 2 50 basis point hikes in H1, then they could slow the economy close to or even into recession. With a slowdown expected from the Ukraine conflict, the Fed's task has also become a little tougher. We'll be tuning in to any Fed member comments a little bit more closely, looking for clues. And indeed, you can expect next week's employment data to be a big event. Oh yes, even bigger than the normal sweepstake fanfare and banter. Not to be missed. In the market, the dollar index rose to 97.75 as that risk appetite fell away. And euro dollar fell to 111.30, but we have recovered a little and we opened this morning around 112. So that's it from me, capping off another week. Have a great weekend. Join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.